Good morning and welcome back, everyone, to our Monday morning Trade Ideas webinar series. My name is Tony Zhang. I'm the Chief Strategist here at OptionsPlay. And we start off this week again with news over the weekend kind of driving equity futures lower, similar to last week for different news or different reasons. Last week, obviously, the news out of China with the DeepSeek AI model rattled markets with regards to concerns around how much U.S. companies are U.S. companies are spending on the AI arms race. Sparked volatility to start off Monday morning last week. Largely by the end of the week, we recovered from those levels here, but this week are we find ourselves over the weekend with President Trump launching a series of tariffs, as he said that he would on February 1st for China, Mexico, and Canada, after what seemed like um, his tone softening a little bit with regard to tariffs after coming into office. Investors sort of, if you could say, got a little complacent. Um, Thought that perhaps there was a little bit more room for negotiations before tariffs got slapped in, found themselves over the weekend uh, surprised, if you will, about the tariffs. And so far, we have equity markets opening up lower as a result of that. We have a higher dollar, we have um, oil rising, we have the U.S. Equity markets. We have the S&P pre-market down about 1.6% here. So starting off this week with a little bit more volatility, similar to where we did last Monday, a little less than we did last Monday. So let's kind of take a look at where we stand overall from a macro perspective, and then dive into trade ideas for the week. And a reminder for those of you that join us for our Thursday education sessions, we will be covering rolling options again for spreads this week at 4:15 p.m. That also is with Brian Overbeam. So let's take a look at kind of the S&P 500. So like I said, last week we opened up basically near the all-time highs. On Friday, we basically got another open near the all-time highs, even though Friday's close was, at least for price action on Friday, wasn't particularly strong. And that was something to note. Was basically on Friday, price action was relatively weak on the S&P 500. We opened near all-time highs and close kind of back inside the trading range. You saw the same thing here on the NASDAQ 100. Note that on the NASDAQ 100, we failed to get back to all-time highs. We kind of have a series of lower lows, which isn't particularly strong from a price action perspective, especially when you combine it with the poor intraday price action that we got here on Friday. We saw the same thing here on the Russell 2000, where we failed to get above that 50-day moving average, really kind of could not manage to break out above that 230 resistance level here from the last couple of weeks. And then you have RSP, equal weight S&P 500, similar kind of range, even though it's slightly above that 50-day moving average, failing to get above that level here on Friday. So, just on that alone, prior to the tariffs rhetoric, we already came into this Monday with a little bit more hesitation with regards to the strength of the overall markets, the relatively poor price action from a weekly and daily perspective, and the news over the weekend kind of tipped things over a little bit, where we've started to trade quite a bit lower on the open. Now, with regard to the tariffs themselves and the impact that has on the overall markets, it's hard to say for sure, what our views are there from the perspective of we don't really know if the intentions of the tariffs are to be put in place for some time or simply to be used as a negotiation tactic. Or rather, we know that it's meant to be used as a negotiation tactic, but the question is whether or not how long each of the countries or pairs of countries can standoff against each other with perhaps retaliatory tariffs, or there's a deal that is to be done relatively quickly. That's really the unknown here right now. Now, I do think that we can go back to looking at 2016 as a playbook when President Trump did also launch a series of tariffs against different countries. Initially the sell-off from equity markets or initial reaction from equity markets were all negative. And then what we subsequently saw was a bit of recovery from each one of those sell-offs. It's hard to just draw exact parallels to where we are today because we obviously are in a different world here. Um, but that is the playbook to currently to look at. So there are some things with regards to, we've seen a significantly stronger dollar as a result of these tariffs, and that kind of is because of the fact that expectations are for inflation to pick up as a result of these tariffs. That drives 10-year yields higher, that drives US dollar higher, and that to some degree offsets some of the impact of tariffs with the stronger dollar, um, because importing goods become relatively cheaper with the stronger dollar. So it actually hurts the foreign or the country on the other side of this a little bit more than it does hurt US consumers and US exporters as much. So those are some of the things that will continue to evolve here over the next really a few months, because that's really how long it takes, obviously, to both negotiate, some of these types of deals and to see kind of the actual impact of tariffs to consumers' bottom lines, to exporters' bottom lines. So this is something that will evolve here over the next few months, and we will continue to update you as new information comes out. But in the short run, expectations are for some increased volatility, some increased downside in terms of equities. But overall, we've seen kind of markets recover from these tariffs in the past, and that is largely what I expect will happen here because, again, these tariffs are generally used as a negotiation tactic to gain leverage in negotiations to try to resolve some of the things. And specifically, the tariffs do name the things that President Trump wants these countries to resolve in order for these tariffs to be removed. So it's pretty clear as far as what the ask is for these tariffs to be removed. And let's hope that these countries can work together and form some kind of deal. Historically, these three countries, Canada, Mexico, and China, have uh, found some ways to negotiate a deal, and that is kind of our base case here at the moment. Uh, so if you look at kind of growth versus value, we've seen a little bit of impact here on growth, kind of starting to outperform value here again. You do have commodities pulling back to a major support level here with the breakout here of oil to higher prices. Expectations are for commodities to find a little bit of support here and start trading higher. You do have high yield corporate bonds continuing to trade near all-time highs, providing a bit of a risk on signal here for US equities. Um, and you have the VIX at the moment still remaining fairly elevated at 16 and a half to open here for today. Now, I obviously expect the VIX to be a little bit higher here on this open here again. So in 30-day implied volatility right now here on the high end, really speaking to the fact that investors are a little bit fearful because it's generally speaking, with the S&P 500 near all-time highs, you usually don't see a 16 handle on the VIX when the S&P is near all-time highs or opened up at all-time highs, which is really reflects um, the expected volatility that traders have had going into the weekend. So fears were already a little bit elevated here going into the weekend, and with the tariffs, that's part of what drove kind of the volatility that we're seeing here this morning. Um, 10-year yields remain fairly elevated at that 4.6% level here to the upside, with bonds continuing to sell off here. That yield is continuing to rise as a result of the tariffs here this week. That's going to drive the US dollar higher here. And also provide a bit of a headwind here for equities. And you do have gold breaking out to new all-time highs here last week, and we'll likely see that continue. And this is a new bullish cycle here for gold after breaking out to those new all-time highs. And oil obviously pulling back substantially here over the last couple of weeks, now finding a bit of support here and will be rallying from here as a result of the tariffs that have been put in place. And then if you look at the rotation here, we continue to see rotation into three primary sectors. We have consumer discretionary that has been continuing to outperform the S&P 500. You have communications that have now broken out to a new all-time high. And you have financials that have also broken out to new all-time highs. We continue to see flow into those three particular sectors. And on the flip side, we starting to see flow out of technology. Technology has basically been flat with the S&P 500 for the last few months. We're starting to see that flow out of technology here, which isn't particularly a bad thing per se, as long as we see more rotation going forward, because technology has been leading for a long time. So having that outflow into other sectors is relatively healthy. We'll see how long that lasts, but consumer staples continues to underperform the S&P 500 by a pretty considerable margin here over the last few months. Industrials starting to underperform here as well after what has been a pretty nice run here since the beginning of the summer. You have energy also losing a lot of ground here. We do expect that to recover a little bit here with the spike in energy prices after the tariff announcements, and utilities underperforming the S&P 500 by a pretty considerable margin since October. Home builders with the 10-year yields continuing to rise. We've seen this kind of recovery in home builders now become an opportunity for short selling again. And semiconductors also, we saw what seemed like some initial outperformance here for semiconductors, now kind of turned back into underperformance here, especially with Nvidia being the 800-pound gorilla in the room for that particular sector, continuing to underperform the overall market. So that kind of gives you an overview of where we currently stand from a broader macro perspective. And now what we're going to do is we're going to move into our trade idea section, where we kind of the primary goal of this session, these Monday morning sessions, is to not only give you an overview of the overall markets, but actually show you where we feel there's the most opportunity here for the week from a trading ideas perspective. And for that, what we do is we always maintain a bullish or bearish list. Now, these are stocks that we have a strong technical and fundamental view that is aligned with each other. And the reason that we host these sessions on Monday morning, and why it's really important for many of you that are interested in the services that we offer and to attend the session, or at least watch the recording when you have the opportunity to do that, is because this is the session where we go over in detail all of the trade ideas for the week. So when we send you trading signals throughout this week, they will be based off the symbols on this particular list. We do a lot of research for technical and fundamental analysis to arrive at these particular stocks. So these are the stocks that we send you trading signals on for trading options, because our goal is to try to leverage some of the moves that you've seen in these types of stocks, like, for example, Visa, and turn that 9% return into a 50% return like we recently just did on Visa. And the idea is that we want to utilize options to leverage the equity research that we do and turn these 5-10% moves in the underlying stock into 50, 100, even 200% returns from an options perspective. So this particular session, we basically lay out the reasoning behind the technicals and fundamentals of each idea, so that you can do your research now at the beginning of the week, so that if we send you a trade signal tomorrow morning on one of these stocks, you've already done your research and you can go ahead and place that trade. You don't have to scramble that morning off to figure out, oh, what is the stock? Let me do my research. Let me see if I agree with the view that OptionsPlay has in order for me to trade this in my options trading account. And for those of you that are interested in a membership here with OptionsPlay, that's really kind of how we take the equity research that we do and try to translate, these 5, 10, 15% returns into multiples of that utilizing options. And that is with your options play subscription that you can have access to those trading signals. So let's dive into kind of where we currently stand and the ideas that we have in our trading uh, ideas section. So, first one that we want to take a look at here is Lamb Research. Now, Lamb Research recently was trading kind of in this range here between, call it 70 and 80, a relatively tight range after what has been a period of underperformance, and we were starting to break out here to the upside. This was prior to the DeepSeek news. This was kind of prior to all of that here, and we basically started to see the stock outperform the S&P 500 as it broke out from a trading range. The news out of DeepSeek obviously knocked this stock back down into that trading range, but we did find ourselves at the end of last week back out of that trading range, meaning breaking out again, which is a strong positive here, I would say, for the outlook that we have is despite all of the news out of DeepSeek, we continue to see Lam Research outperform. This morning, the market is also down a little bit here, but largely we're just trading above or around that $80 level. So our thesis still stands correct. We continue to have a series of higher highs and higher lows, and we're looking for the breakout here above this level into the 105 range as our upside target here. Whoops. 105 is kind of this gap fill level here. We're looking for this to fill that gap here to the upside. If you look at kind of from a fundamental perspective, it trades at a slight discount relative to the industry average, even though it grows faster and is more profitable, which is why at the very least, this should trade in line with the industry average, not below it. But given the superior growth and profitability, it actually should be trading at a higher premium relative to the industry median. And that's kind of gives us our fundamental case here to the upside for both for Lam Research on both technicals and fundamentals. CME Group. This is something that we added back in about a month ago. The stock is still largely trading sideways here. We basically are looking for this breakout here and for that continuation. This is at the moment a bit more of a grind here to the upside. As you can see, CME does trade at a higher multiple to the industry average, but as you can see, one of the things is that their net margins are 57%, something we really don't ever see ever anywhere. The only kind of stock that I can think of off the top of my head that has net margins in the 55% range are Nvidia and Visa. Both of those trade at substantially higher multiples than 22 times forward earnings. And that's really kind of where I do believe that this can trade at a higher multiple here to the upside. Because you have stocks that have far lower margins with these types of growth rates that trade at much higher multiples than CME do, which is why I believe from a fundamental perspective, this stock is undervalued. And then this, from a technical perspective, very much on a straight uptrend, more of a slow grind here to the upside. But that's really kind of where our expectations are for CME. Looking at Visa, we also added this here relatively lately here around this 315 level, basically looking for that breakout here. And since we've added it, the stock has broken out really nicely here to the upside and now trades at 30 times forward earnings, which is now starting to get to the higher end of the spectrum with regard to growth rates. But Visa, as you can see, grows faster than its industry and is far more profitable. And that's what justifies 30 times forward earnings. I think that this still has a little bit more room here to run here to the upside, even though we've seen a pretty substantial run here to the upside that does put, from a momentum perspective, Visa into a more overbought category. Boeing, this is a stock that we added here also into this 170, around this 170 level here after kind of breaking out and coming back to retest this level as resistance. We're looking for that continuation higher. We added this before the crash of that Boeing 737 out of Korea, even though that does not seem to be uh, an airplane manufacturing issue. But that obviously weighs on the stock itself to some degree. But so far, it is holding that 170 support level, which is important for us. Our upside target here is 190 here to the upside in the short run. I'm looking for a further upside here beyond that. But this is a long-term play in kind of what is the turnaround story for Boeing. It trades at a pretty substantial discount relative to the industry. Within the aerospace industry, it is trading at the lowest valuation from a price to sales perspective. And I'm only using price to sales because Boeing at the moment is not really profitable, and so you can't really use PE ratio. So using from a price and sales perspective, Boeing is definitely on the cheaper end of the spectrum, despite the fact that it grows at a substantially faster growth than the industry median. The net margins are negative here right now because it's coming out of a net loss. And we expect that Boeing to come out of that net loss here in fiscal year 2025. The new CEO moving out to Seattle, being a very hands-on CEO, just getting past the labor disputes, starting to refocus on production of the 737 and 787 programs and trying to get the 777X off the ground. Really seemingly like Boeing is putting their heads down again, focusing on safety, focusing on deliveries, and hopefully that can uh, um, make investors feel that Boeing is headed in the right direction. And from the chart perspective, it's starting to show early signs of that. And that's exactly what we're betting on, is that longer term recovery here for what is arguably an incredibly important industry for the US. And hopefully we have an incoming administration that also agrees with that and supports that view. Dexcom, we added this here recently when it was starting to break out here above that $80 level here. We're looking for that breakout here, just around that breakout here around $78. That's when we added it. The stock has pulled back here to test that level multiple times and is now kind of broken out here above that $82 breakout level here to the upside. Our target here is around 110. So we, trading around $86 right now. We still have plenty of upside to go here for Dexcom. This is also a bit of a long-term turnaround story. Dexcom, one of the leaders in continuous glucose monitoring devices, certainly the preferred vendor for insurance companies and hospital groups. But there is a competition in this particular space. That is part of why the stock got hit so hard recently. But seemingly we have some signs of recovery here to the upside as it continues to outperform the S&P 500 over the last few months. This is part of what gives us that view here for this particular stock. Now, it does trade at a premium valuation of 43 times forward earnings. That is definitely one of the riskier sides of this particular play. But as you can see, that higher valuation is supported by faster than average growth for both top and bottom line, as well as it is more profitable than its peers. So, the higher valuation being a risk is also to some degree supported by what is growth and profitability that exceeds the industry medians. Block. This used to be Square, now it's called Block, and now the symbol is XYZ. So a lot of changes to this stock if you have followed us here over the last few years. And XYZ being probably the big one. So if you can't find SQ, which was the previous symbol for Block, on your brokerage account or from your research platform, it's because it recently changed its symbol to XYZ. Block, one of our trades that we added here when it was kind of bottoming. A lot of these trades we kind of add when they've kind of started to bottom and started to break out here. As it broke out here above that $70 level, it came back to retest this level of support, and it's continued to move higher here. It's recently been trading in this range between 82 and call it 95 or so here, and we're looking for that breakout and to continue that upside move beyond 95. Our upside target here is closer to 150 because, as you can see, it trades at substantially discount relative to its industry. Now, part of that is because its net margins are on the lower end of the spectrum, and that is something that kind of does provide a bit of a floor here or a bit of a ceiling on its valuations here. But as you can see, Block grows substantially faster than its industry average, and that's part of why I believe this is an undervalued stock here. And it's proven itself over the last couple of months to be that case as the stock has gained 23% since we've added this stock, and we continue to see some further upside here in XYZ. Lululemon, this is the stock that we added here back around 280 or so. Very similar price action to a lot of the stocks that we've added, where basically underperforming stock started to bottom here and then started to outperform. And that's kind of where we started to add that. And that's where we had a pretty nice run since that's up 46% since we've added the stock. It is now trading at a premium valuation. At the time when we added it, it was trading at a discount valuation. But as you can see, it grows faster than its industry. It's more profitable than its industry, and that's what justifies the higher valuation here. Our upside target here is around 470. So we made a pretty good, sizable move towards our target, our price target here, and we're getting relatively close to that price target where we can potentially start taking profits on this particular trade. Meta, this is one that has recently moved quite a bit here after what has been a slow start to this. We added this back in October, at the beginning of October, basically near those highs. And the stock basically traded sideways for multiple months before it really started to take off here last week on the news out of DeepSeek. Interesting that that was the news that kind of drove this stock higher here, but we'll continue to monitor to that. But it trades at what at the moment, as you can see, it's trading in line with the industry average. We've been talking about the fact that I think Meta is one of the most undervalued stocks in the tech sector. When we add the stock, it's trading around 23, 24 times forward earnings, despite growing substantially faster than the industry median and far more profitable than the industry, which justifies a higher multiple. So we're just at the point where it's trading in line with the industry multiple, but I really think this should be trading at a higher multiple here, and that leaves for some further upside here for Meta. But just some notes around Meta. One of the stocks that I really like at the moment because of its far superior growth, focus on profitability and investing heavily in AI. And that's a bigger debate here as far as kind of the investment in AI. But I think the news out of China with DeepSeek only increases competition, and generally speaking, competition is good for the industry. It's good for consumers, and companies that are at the forefront of this, like Meta, are likely going to be beneficiaries. And Meta also arguably one of the best commercial uses of AI here at the moment. There's a lot of money being thrown into AI, but not a lot of revenue being generated by AI just yet. Meta, at the very least, have incorporated AI into their products and learning to find ways to monetize that. And that's really kind of what investors are paying attention to. And I think that's why Meta, off of the back of the DeepSeek news, has continued to rally and will continue to rally going forward. Now, Amgen, this is one that we recently just added here. Um, Similar to a lot of trading setups, right, where we basically have a stock that recently formed a bit of a bottom after what was been a period of underperformance. Now we're starting to get that breakout while it outperforms the S&P 500. So this is really where we got that breakout here above 280, and we're looking for some further upside here into that low 300 range here, 325 being the upside target here for Amgen. As you can see, it trades at a multiple that is in line with the industry average, with growth metrics that are basically in line with the industry average. So sorry, a multiple that's slightly a discount to the industry average, even though it's trading in line with the industry average from a value, from a growth and profitability perspective. So, as it breaks out, as it outperforms the S&P 500 and breaks out, this is not the type of trade we're expecting it to, get 40, 50% gains from the underlying. This is the type of trade where we might see, 10, 15% move here to the upside. Alphabet, this is one that we continue to like. We added this here before it kind of started to break out here. We added this round, it was trading around 174 just before that just before that big move here to the upside. The stock has had a nice rally since then and then consolidated after that rally and is starting to break out here again to new all-time highs on Friday. Alphabet also similar to Meta remains one of the best values within the tech space, trading at only 22, 23 times forward earnings, despite the fact that it grows faster than the industry average by far and is far more profitable than the industry average. So the fact that it only trades at a slight premium to the industry average gives us further room here to the upside from a fundamental perspective, and the technical continues to look fairly strong. You've got breakouts to new all-time highs as it outperforms the S&P 500. All the hallmarks that you're looking for from a bullish stock you've got here in Alphabet. So technically and fundamentally looks incredibly strong and also another leader in the AI space. Now, NVIDIA, this is the one that is probably that most people are asking questions about unlike a lot of other stocks that kind of sold off initially with the DeepSeek news, a lot of those stocks have kind of recovered. Nvidia is one of the few that didn't recover and actually continue to sell off here throughout the week. We're seeing Nvidia open up a little bit lower here again after the news out of the tariffs. And this is really where I've spent a lot of time here over the last week, kind of researching and understanding the implications and the impact that news out of China with DeepSeek has on NVIDIA, and whether or not this changes the outlook here for companies like NVIDIA, or this is more of a short-term negative that becomes a buying opportunity. At the moment, I stand by, after doing a lot of research, and for those of you that are interested in doing the research alongside with me, a fantastic podcast just came out here in the last day was with Lex Friedman. He interviewed two AI researchers for 5 hours. It is a very long podcast, but for those of you that are really interested in kind of understanding, AI models, DeepSeek, what's truly innovative about it, what's different about it, what the outlook is for the industry. I highly recommend, investing those 5 hours because it'll give you a lot of insights into investing in this particular space overall in the next, 6 to 12 months. But it really kind of continues to confirm the view that companies like NVIDIA are the absolute backbone of this particular industry, especially kind of looking forward. Companies have now invested tens of billions, hundreds of billions of dollars over the last few years in building out data infrastructure for training these models. And we're now at the point where a lot of these models are really good in terms of what they're capable of providing from an AI perspective. But if you look at kind of the actual compute that's required for training these models versus running these models. Running these models actually requires far more compute than training. So it's the actual application of these models and the use of these models that actually generates a lot of the use for these types of NVIDIA chips. And that's part of why I believe, especially with Project Stargate, the US has strategically looking to invest in building out data centers specifically for training and inference, and which is the use of these AI models. China recently just last week announced that they were going to invest roughly 160 billion US dollars towards infrastructure for AI. This is the first time we're hearing China even mention, their investments within the AI space. Up until now, it's really been the US dominating this particular industry and investments in this industry. But with China heating up here, that is only going to increase demand for NVIDIA chips. And right now there are export controls in China for NVIDIA chips, but those NVIDIA builds chips that work with those export controls. NVIDIA still has 12% of their revenue generated out of China, and if China continues to heat up in this particular arms race, this is really where the net beneficiary of all of this is NVIDIA. Now, putting that aside, even if you don't follow any of that stuff, just pure numbers. NVIDIA still at the moment remains, and I stand by the fact, one of the most undervalued stocks in the industry. I can't express this enough. There are no other stocks in the S&P 500 that are putting up growth numbers that even look remotely like this. And even if you disagree with analysts in terms of their growth numbers, right? And NVIDIA has only blown out analyst expectations every single quarter. But let's just say DeepSeek changes the game. These companies start to scale back some of their investments in building out NVIDIA chips. And at the moment, there's no signs of that at the moment, even regardless, even with DeepSeek. But let's just say, these analyst expectations are a little bit too high. Look at those growth numbers, 65% EPS growth, 57% revenue growth. Nothing comes even close to that. And then on top of that, you have net margins that exceed 55%. And yet it only trades at 27 times forward earnings. Look at, Meta's trading at 24 times forward earnings, and we think that that's a fantastic value. And it's trading nowhere, and it has growth and profitability metrics that don't even touch that. You have Apple trading at 32 times forward earnings, growing at just low single digits with, net margins that are half that. You have plenty of, Visa, a lot of these stocks that we just mentioned that we think are trading at reasonable valuations that have growth metrics that are nowhere near NVIDIA and profitability metrics that are nowhere near NVIDIA. So, I stand by the fact that even if you don't necessarily agree with everything that I've assessed with the AI industry and kind of what the future looks like, I still can't stress enough, if you're looking for money to if you're looking to put money towards something, um, NVIDIA represents an incredible amount of value here. And, with the market down another 4% on this stock pre-market here, it's trading around 115 at the open. You are buying the stock at a very, very cheap valuation. That's all I have to say. If you own stock, if you already own NVIDIA stock, you obviously have some agreement with me on that particular view. I think the sell-off that we've seen here in NVIDIA is a bit of an overreaction and an opportunity, but more importantly, for investors who are looking for a better investment. Now, NVIDIA, I think over the last few months has represented one of the best value plays in the industry. I've been pounding the tables with the fact that I think NVIDIA, Meta, Alphabet are the best values in the industry, and Apple is the worst value in the industry. And I continue to stand by it. Now NVIDIA is trading at around 26 times forward earnings as of today's market open. So that represents a really impressive opportunity, in my opinion, for investors who are looking um, for this particular stock. Disney, we added this stock back here when it was trading around $94. Again, you'll see a lot of this kind of similar pattern. Underperforming stock forms a bit of a bottom, starts to break out here. That's when we added. That's exactly what we did here with Disney. It outperformed here since we've added it, came back to retest the support, and now starting to trend higher here again. Disney now trades at 20 times forward earnings versus when we added it, it was trading at like 16, 17 times forward earnings. As you can see, growth metrics are in line with the industry average and is slightly more profitable than its industry. So I do believe that it can trade and support these types of valuations. Our upside target is here around 125. So we're very close to our upside target here for Disney. Shopify, this remains one of our best plays here, up 65% since we've added this stock here. Similar to all the other stocks, kind of underperforming stock, bottomed out, started to outperform here. And since it's done that, it continues to outperform. And look at that. It's trading just near 52-week highs here again. Maybe we can get another breakout and continue moving that higher here. Our upside target here is around 140. And, it does trade at a high valuation here, but look at the growth metrics. It is supported by that extremely high growth metric here. And that's what supports the higher valuation that we see here in Shopify. We added Quanta services last week here after the sell-off here with DeepSeek. These are power services, and this is really another thing that, if you actually do some of your research in this particular industry, the biggest uh, one of the biggest things holding back the US's development of kind of AI infrastructure is not necessarily, the data centers themselves, but the power that's required to power those data centers. And AI is incredibly power hungry, especially on the inference side, meaning once you've trained the model and you're now using the model, the cost of operating that model from a power perspective is one of the biggest costs of running these AI models. And this is actually where, from a strategic perspective and from an industry perspective, we're far, far behind China in power production. China's steel mills, operate, gigawatts of energy that we just have nothing that compares to the industrial power production that China has and is capable of scaling. And this is actually one of the areas that kind of is a concern actually for kind of how fast we can build out relative to China. And power companies like Quanta that builds power generation units is the net beneficiary of all of this. It's why the stock has had a really nice run here over the last couple of years, and we continue to see some forward upside for Quanta services. Trading at 30 times forward earnings is certainly on the higher end, especially with net margins of only 4% here. And that's something that we have to keep an eye out on. But from a technical perspective, last week's news kind of drove the stock lower to a major support level here, and we're looking for a bounce back to kind of this uptrend that we've seen here in Quanta Power Services. Um, Pepsi oversold here. We're looking for a bounce. We started to get that initial bounce here. We're looking for some further upside here, trading at a slight discount to the industry, despite growth metrics that are roughly in line with the industry. Take two. This is one of our bearish ideas here for the week. It's been trading in this particular range. We're looking for a potential breakdown from that trading range here and potentially breaking down below that 177 because it is trading at a very high multiple relative to the growth rate and the fact that, its net margins are negative by a pretty significant margin here. So we believe that this stock is fairly overvalued at the moment. Costco is another stock that we believe is significantly overvalued at 53 times forward earnings. We discussed this at length here last week, so if you want to watch that recording here, but growth metrics that are somewhat better than the industry average, but net margins of only 3% is really the biggest risk here for a stock that trades at 53 times forward earnings. This stock has a bit of a cult following here from both US and international investors here. And then Apple, I've been pounding the tables for weeks about the fact that Apple is one of the most overvalued stocks here. And we shorted the stock here near the peak. The stock has pulled back a little bit, came back to recover on earnings, but I still believe that there's further downside the same way I believe Tesla has some further downside here, trading at 32 times forward earnings. Think about that. Nvidia's trading at 27 times forward earnings. Apple's trading at 32 times forward earnings, far more expensive. And look at the growth metrics for Apple. 10% EPS growth, 6% revenue growth, net margins of 24%. And NVIDIA is orders of magnitudes higher in terms of growth, far more profitable, yet it trades at a valuation that's, what is it? Nearly 20% lower than Apple. Something is broken there. Short Apple, go long stocks like Nvidia, Meta, Alphabet. Those are the plays that I like in terms of tech. So markets are open here right now. I will let you guys go. I hope that this is helpful in giving you a better understanding of how we're viewing the markets after the tariff news over the weekend. and how we are structuring some plays here for the week. I hope that you guys find this useful in your days. You have another big earnings week coming up here, Wednesday, Thursday, Friday. This is a reminder of our earnings calendar. It is organized for you for from a from a liquidity perspective. So as you can see on Tuesday, anything that is has an asterisk sign next to it on Tuesday, those are the ones reporting in the morning. And the ones in green are the ones that are most liquid. That's going to be the ones that you want to spend your time researching. And then the ones that don't have the asterisk signs are the ones that are reported in the afternoon. So we have a very busy week. I think this is going to be the busiest week for earnings. You have Alphabet, you have um, Alphabet on Tuesday. You have Snapchat on Tuesday. You have Take Two. So a lot of the stocks that we actually have in um, uh, our list are reporting this week. You have Pepsi reporting this week. You have Disney reporting this week. You have Amazon's reporting. Yeah, so a lot of the stocks, you have Alphabet reporting this week. So a lot of the stocks that we have on our list are reporting this week. So this is kind of Take Two's reporting this week here as well. So keep this on your keep this calendar up. It's going to help you navigate earnings season a lot easier. So um, this is part of your OptionsPlay subscription. When you log into your OptionsPlay platform, you can bring up the earnings calendar and view it alongside with you so that you can help you navigate this earnings season. With that, thank you so much. I hope you guys have a great trading day, and I'll see you guys here next week.